Alan Nuckman is with us. He's the Chief Market Strategist at Agora Financial. Alan, I know you want to talk Chipotle as well, okay, but let's talk some energy. There's still more excitement here with the Occidental Anadarko situation, but you're focused on Apache. Tell me why.
Well, let's talk about the macro market in general.
Okay.
So you've seen a momentum melt up, and obviously it's not a matter of if, it's just a matter of when we're going to make new highs. You saw the NDX come back and make a full V recovery. The tech shares have led the way up 30% off their lows. Okay, so let's look at the energy market. Crude oil's actually done better in percentage terms. If you look at crude, it's 50% off the lows, so it's been a big V bounce as well. Now, we still have a long ways to go to have a full recovery, but it's following along that same path. So I think this is a sector that's been a bit subdued, and I'm looking for this energy sector to play catch-up, and that could be the next catalyst for the market in general, because those stocks have been left behind so far.
Yeah. All right. Now, the point is, look, the crude rally, impressive. The energy stock rally, not as impressive. I'm on board with that, Alan. But does there necessarily be like a one-to-one, correlation? Do you have to look at that and kind of figure out a price target then based on what they usually do together? Or how do you think about that?
Well, I think it's risk-reward at this level. I think you can find some undervalued energy stocks, and this is a good example. So this is a stock that was at $50 in last October. So now it's bottomed out a bit. It's still down about 10% over the last 52 weeks, so it has a lot more upside. This stock was also at $100 back in 2014, which wasn't so long ago. So looking at it here, I like the July $30 call. And it's about the strategy as much as the stock. The July in-the-money call, the $30 call, we're trading around, what, $36.75 right now. The $30 call is $6.75 in the money. This option is trading for $7.50. It's going to act like the stock on the upside here. So I think it's a way to position with a chip down that doesn't have a lot of downside risk, and it's going to benefit, obviously, as you see these energy stocks continue to rebound and break out to the upside.
Yeah. Okay, so to your point, Apache has been a real laggard here. Even relative to some of the weakness across the board, and the 30 calls that you're buying July, so you're giving yourself some time here to hit an earnings, Alan.
Right, it's about 3 months of time. Look for good things to happen here. And as you know, my game is about finding distressed stocks, buying these in-the-money options, using that as a stock substitution strategy, ties up less money, has less inherent risk, and the payoff is significantly greater because you need just a modest move in the underlying stock. If we get this stock up to the 40 level, this option is going to have a pretty healthy gain in value. So that's the percentage play that I'm looking at. It's about momentum, and it's about probability here. So looking for this strength to continue. Again, I've been the guy that's been smart enough to not try and pick the top or the turn in this market. Just ride the wave, and I think this is another example that it has a nice percentage play based on the probability. Yeah,
all right. You got it, Alan Nuckman. I like it. Chief Market Strategist at Agora Financial. We've been watching Apache. The dog there in the group, man. Down. All right. See if we can pick it up. Thanks, Alan. We will check in with you soon. Joining us from the
Thanks,
CBO.
Oliver. Have a good day.